Hello everybody. In chapter 3 we're going to focus on the customer and sales area of Sage. This is the accounts receivable system, or how the company records money coming in from customers. And to get started here, I'm on the landing page once you've launched Sage, and I'm not inside of the company file yet, so I'm going to click on Open an Existing Company, and then from the list I'm going to find the Bellwether Garden Supply company that was most recently modified. Should be at the top of your list there, and then select it and then click OK. So once the software is loaded, from the navigational menu we want to select Customers and Sales. So once you're looking at the customer and sales screen, you're going to see that it's organized in a similar way to the vendors and purchasers screen. We've got some tasks here that relate to customers. If I click on this customers and sales task, you can see I can enter a new customer, I can view and edit customers, I can write letters to customers, and so on. We'll be doing some of that. We'll be adding a new customer here shortly. And then we also got some workflows. We'll be talking about those workflows in great detail and some reports that relate to customers. We also notice on this screen that there are two tabs up top, customer and sales, and then customer management. I'm going to click on customer management tab. And here what I can do is it's sort of like a customer center in QuickBooks. I can see transactions from each of the customers. So from this drop down, it says customer ID, select a customer. I'm going to select one of them. I'm going to select Archer. And then I'm going to make sure that these date ranges show all transactions for both of them. And up here we're looking at the sales invoices that have been recorded with Archer, and then down below we're showing the receipts of payment for those invoices. So it's a quick way to get some information about the recent transactions, or all transactions in this case, from your individual customers. Right now though, I'm going to go back to the customer sales tab here and talk about the workflow that we see here. So you can see with these arrows there's quite a few steps that could be in this particular workflow. The first step here is looking at quotes and proposals. And not every business is going to use each of these steps, but I'm going to talk about what each of these is used for. So let's say that we run a roofing company, and a customer asks us how much it will cost to replace their roof. So we're going to go over to their property, we're going to take some measurements, interview them, get some information about the types of materials they want to use, and we are going to give them a quote or proposal. And we're going to create that quote or proposal in Sage so that we have a record, an estimate, showing the customer the expected price for the job. That in itself does not cause a change to the company's account balances, because we're just giving them the detail about the estimated price that we charge them. There's no contract yet. If the customer decides to move forward, we would turn that quote into our next step, which is a sales order. A sales order shows that the job has been agreed to, but we haven't done the work yet. This is also a non-posting event in that it does not cause a change to the company's accounting record balances. We haven't done the work yet, so we can't count the work as revenue, and we can't show that the customer owes us any money because we haven't done the service yet. Once the work has been performed and the roof is finished, we would convert the sales order into a sales invoice. This is the official bill that we send to the customer. And then once the customer pays us, maybe by check, maybe by direct deposit, etc., credit card, we record that payment in the receive money window. Now it's possible we could also involve this workflow, or this step in the workflow. We could provide the customer with some financing. So maybe we could give them some time to pay off that bill and charge them interest. We're not going to see that in our examples today. That's also a possible step. And then also, once we receive that money, depending on how we're paid, we might also need to, if they paid us in the form of cash or in the form of a paper check, we might have to bring that cash or that paper check to our bank and separately record that as a bank deposit. So we're going to be working through these steps now from the transactions in the text. So the first thing we're going to do, and this is described starting on page 96 of the book, is we are going to create a quote for one of our customers. So I'm going to click on quotes and proposals, then select new quote. And the first step is to select the customer that we're preparing the quote from. They're already in our system. We're going to find them. So under customer ID, I hit that magnifying lens and I find them. They're Dash Business Systems. So I can see that some information is populated with their address. And now I'm going to enter the date of the transaction. It looks like we're dealing with March 15th. So I'm going to click the calendar. You can't see my calendar, but I am selecting the 15th. Once again, you might see a different year of 2022. That's totally fine. All right, so then next we're going to put the details about the quote down below. So it looks like they've asked for a quote for a pump hand sprayer, and we've got a SKU number provided by the text. It is EQFF, so I can start to type that, EQFF, and I'm starting to see those here. And then the number is 13,110. It's this fertilizer compression sprayer. So I've got that in there, and it auto-populated with unit price as well as a general ledger account number. If I click on that, I can see which account, and it's mapping it to a particular income account or revenue account, sales of equipment. So that's looking good. And then the quantity that we're quoting here is a quantity of 1. So I'm going to type that quantity there, 1, and then the amount is calculated by multiplying the quantity by the unit price. So then the next item that we're quoting them for is going to be some garden hose, and we have a SKU for that as well. So I'm going to click on the magnifying lens under item, and I'm going to find that. It also starts with EQFF, no, EQWT, excuse me, and it looks like it's 15,120 75-foot garden hose. So once again, the general ledger account number populates, as does the unit price. And now we're going to enter the quantity for the hose, and it was a quantity of 4. And now the amount is auto-calculated, and the quote total that you should see on your screen should match mine, should be $211.95. Sales quotes are non-posting. We're just giving the customer an estimate of what this would cost them if they purchase it from us. It's a little bit misleading in my opinion that quotes actually have the journal button up top, and it will actually show a general journal entry, but no journal entry is actually posted from recording a quote, so it's a little bit misleading. What's showing there is what would happen if this quote actually becomes an invoice where we're actually billing them because we have performed the service or delivered the goods. And so it's a little misleading that quote would have a journal entry, because it doesn't post to an account. So I'm not even going to look at it even though the text says to. It's sort of silly to me that it's there. What I want to do now is save this transaction, and then I'm going to close out of this quote screen. So now let's say that Dash, our customer, accepts the sales quote and wants us to fulfill the order. But we haven't fulfilled it yet, so what we're going to do is we're going to convert this quote into a sales order. So to do that, I'm going to click on Quotes and Proposals, and I'm going to select View and Edit Quotes. Now I'm going to find Dash in the list with that quote that we just prepared. Here it is for $211.95, and I'm going to double click on that. So now I have a button up here at the top to convert this quote into a sales order. So I'm going to click on that, and it's asking us what we want to do. Since we haven't delivered the goods yet, we don't want to count it as an invoice, which would actually increase accounts receivable and increase revenue. We haven't fulfilled the order yet, so we're going to convert the quote into an order. It auto-populates with a sales order number, and then I'm going to click OK. The quote screen has cleared out. I'm going to close it out. I'm going to close out of the quote list. And now to see that sales order in the system, I'm going to click on Sales Orders. I'm going to click on View and Edit Sales Orders. And then if I look here, I should be able to find this. And it was for Dash. It was $211.95. And here it is right there. And then if I want to look at it, I can double click on it and I can see it showing the same information, but now it's shown as a sales order, which means the customer has accepted the quote and we're going to be fulfilling the order soon. But we haven't fulfilled it yet, so it has not yet created an accounts receivable or increase to our revenue. So I'm going to close out of these two screens. So next, now that they've accepted the quote, we converted it to a sales order. Our next step, once we've delivered those goods to the customer, shipped them to the customer, we would want to select sales invoices. So we're going to do that. So we do that and then click New Sales Invoice. And from here in the drop down for customer ID, I'm going to find that customer that we just did the order for, and it was Dash. So once I did that, this tab that says applies to sales order number populates. It was on apply to sales, but now this tab's active because the system recognized that there's an open sales order for Dash. So in this drop down, I can select the sales order. There's only one listed. It's the one that we just created. And now I can verify that it is the one that we just created. Once I expand these details out, I can see, oh, yep, there's the pump sprayer, there's the garden hoses in those quantities. Now notice here we've got the amount of items that they ordered from us, and then here we have to indicate how many of each that we have shipped. And we could ship a lesser quantity. Maybe we're out of stock of something, but we're not. The book says we shipped the 1 hand sprayer, and we've also shipped the 4 hoses there. So I'm going to type those amounts in. And then down here at the bottom of the invoice screen here, I'm seeing the total net due at $211.95. Make sure that you see that on your screen. And then now I can take a look at the journal entry, and it actually makes sense now once we've created a sales invoice, meaning that we've delivered the goods or provided the service. Now looking at the journal entry makes some sense. So if we look at this journal entry, we got several line items. So anytime you're in a sales invoice, you're going to have an increase to your accounts receivable. So I find that here for the total amount of the invoice, $211.95. That's a debit, it's an asset, increases on the debit side, so that's there. And then I'm going to have increases to revenue accounts. So I've got a revenue for the garden hose here, the sales equipment, the revenue accounts increasing through that credit. And then I should see another revenue account for the sale of the sprayer. Sure enough, I do. I also am seeing credits because sales tax was charged on the transaction. It looks like the state they are located in, that the business is located in, had a couple of entities of government that we had to remit the sales tax to, so we're seeing that there. And then also, since we're selling goods, we'd have an entry where the inventory is decreasing and the cost of goods sold is increasing. The inventory is decreasing, the cost of goods sold is increasing. So we're seeing that here with the cost of sales there. And the inventory account would be credited there. It doesn't show the amount, but that would be based on the the cost that's in the system and what method they're using, whether it's FIFO, LIFO, weighted average. So I'm going to close out of this invoice transaction, but not before I save it. So I hit that save button, it clears it out, and now I'm going to close that out. So normally after going through that workflow and creating a sales invoice, hopefully down the road the company would collect money from the customer and we'd go to receive money. But the book actually switches us up here, and now we're going to take a look at a different customer's transactions. So the next customer we're taking a look at the records for is named Teasdale, and actually they've been a really good customer per the book, and we're going to offer them better discount terms. So I'm going to click on customer and sales tasks, and I'm going to select view and edit customers, and then I'm going to find Teasdale in the list. They're alphabetically arranged, but you can click on these column headings to change the order if you want. Found Teasdale here. I'm going to double click on Teasdale's record. So once I got their record open, I've got these different tabs. We're going to give them a better discount. So we're going to click on the payment and credit tab. And then over here, terms and credit. By default, it probably says use default terms. We can see the discount was 2% if they pay us within 10 days. We're going to make that 5% if they pay us within 15 days. So from this drop down, I'm going to select customize terms for this customer. And here in this area where it says use discounts, I'm going to change the 10 days to 15 days, and I'm going to change the discount percent to 5. And now that I've made those changes, I'm going to click save to save the customer record, and I can close out of this window. I'm going to close out of the customer list, and now I'm on page 105. I'm going to record a transaction. So it says that we sold 5 hand sprayers, misters, to Teasdale, and we also did a service for them. We cleaned their parking lot and they gave us the total. So we're going to record this transaction. So with this one, we're not going through the process of quote and proposal. We're going straight to sales invoices. So by jumping to this step, we're seeing that not every sale goes through the full process of sales quotes and sales orders. Let's say we have a customer who comes in and buys some product from us, and while we're at it, we also provide a service like cleaning their parking lot. In that case, there's no need for a quote or an order ahead of time. The work is done and the goods are delivered right away. But the customer isn't paying us today, so we do need to bill them for that. So we're going to skip directly to the sales invoice. So I'm going to click on that and then select New Sales Invoice. So from the details in the book on page 105, the customer is Teasdale, and we're going to select them from the customer ID list. There they are. And we can see here that those terms that we just changed for Teasdale are showing up at 5% in 15 days. So that's showing up. The invoice date is March 1st. So if you need to change that, go ahead, but we do not in this case on my screen. And let's see. We do have a tab for applies to sales orders. So we didn't enter this sales order, but there must have been one in the sample company that we could select, but we're not fulfilling that order. So instead we're going to click on the apply to sales tab here. And we are going to be selling them an inventory item. So I'm going to click the magnifying lens in the inventory item box here. And I have a SKU number. It starts with EQ. So I start typing that in, FF, and it's 13,120 hand sprayer mister. So I'm going to select that. And then the quantity that they purchased from us is 5. So I'm going to type that in for quantity. And once I do that, the amount auto calculates. It's $49.95. You can also see that the general ledger account number automatically filled based on the item that we selected there. If I click on the magnifying lens, I can see that this maps to the sales equipment income account. By default, this item is showing as being taxable. We can see that down here as sales tax is being calculated here, and that has to do with this field here. If I click on that, I can see that a code of 1 means regular, and then we've got different exemptions there for different reasons. Maybe they have they're reselling it and they're exempt for resale exemption, or maybe they have like a nonprofit or something like that. So there's different exemptions carved out by the state laws that might apply, but in this case we're going to leave it at 1 because that item is going to be taxable. They're using it. So in addition to purchasing these sprayer misters from us, we also provided a service to this customer. We clean their parking lot. Since that's not an item of inventory, I'm not going to put anything here in the item area. I'm just going to go straight to this description, and I'm just going to type in the service that we did, which was we clean their parking lot. Now it's possible that we could have SKUs for different services in the product and service list, but apparently we do not have this particular service in there. The default income account of 40,000 was selected. That's just a generic sales account. The text indicates that we want to change that to account 41,000, which is other income. So we just find that in our chart of accounts there. And then we are going to skip to the amount field, and we're going to type the amount that we're charging them for this service. What they told us it's $100 even. So I entered that. And then the tax code, we're going to leave it as taxable, even though it's a service. In Michigan, that would not be taxable under the sales use tax laws, but apparently in the state of Georgia it is. So we're going to leave that as is. And then we look at the amount down here for the total net due. I'm showing $158.95. That matches the textbook, so make sure that you get that on your end as well. So now if I click on the terms here within this invoice, it's showing a discount amount of $7.95, which is, if we look at what they did through a calculator, I'm going to pull up a calculator in a moment. They calculated that discount by taking the total amount due, $158.95, and they multiply that by 5%, and that's how they got that discount amount of $7.95 if you round to the nearest penny. But the problem with that is that also so it used the 5% that we wanted to, but it also calculated the discount on the sales tax in addition to the pre-tax amount. And because of that, we need to change that. It should only be on the pre-tax amount. So the pre-tax amount here We don't see it on screen. I don't think if I maximize I'll see it either. Let me look. Nope. So I have to manually calculate that. So to calculate the pre-tax amount, I'm going to take these amounts before tax, so the $49.95. I'm going to add the 100 to get the pre-tax amount of $149.95. Now I'm going to multiply that by 0.05 to get the proper discount amount of $7.50. So if I click back on that terms, I can just type that in here, 7.5, click OK. So now when I go back in there, that's persistent. It stays at 750 now. So now this transaction is ready to be posted to the system and saved. So I'm just going to click on the save. But before I do, I can click on the journal button and take a look at the general journal. Anytime we record a sales invoice, it's going to show an increase to the account receivable for the total net due. It's also going to show increases to the various revenue accounts depending on what service or goods we provided, and it does. So you can look through that journal entry and try to tie it to your prior accounting knowledge of debits and credits in the double entry system. It's always a good idea when you're trying to understand these screens. So now that I've done that, I am going to click the save button, which clears out the screen, and I'm going to close out the window. If I want to look back at that sales invoice that we just created, I can click on the sales invoice button. I can view and edit sales invoices there, and I should be able to find the one that we just recorded to Teasdale for $158.95. So double click on that. And then since the invoice wasn't printed, it doesn't have an invoice number placed into this field yet. I don't want you printing anything, so what we can do here is we can just manually type that in at 101 per the book on page 115. And now I'm going to save the transaction again, and now that transaction has an invoice number. So if I refresh the invoice list, now I can see that transaction with Teasdale, does have an invoice number with it. So now fast forward some time and we are collecting money from Teasdale for that sales invoice. So I'm going to select receive money and then receive money from a customer. The transaction that we're recording now is described on 116 of our textbook, and it says that we are receiving a check from Teasdale in payment of that invoice that we just recorded. And the first thing here, I'm going to select Teasdale in the customer ID. I'm going to click on the magnifying lens and I'm going to scroll till I find Teasdale, select them. And then once I did that, the Apply to Invoices tab became active, and I can see some open invoices related to Teasdale, including the one that we just recorded, which was this invoice number 101 in the amount of $158.95. So that's the invoice that we're going to be collecting on. Now, by default, the system is putting in deposit ticket ID, and it's using the date that that's current on my system. So it's October 3rd, 2025 right now. And what I'm going to do here is be consistent with the text, and I'm going to use the date that we are receiving this payment from our customer, which is March 15. And then since your book says 2019, I would use that, but you guys are using the 2022 software, so use 2022 to match the date of this transaction. And then we'll match the date here. So off screen, I'm selecting the date from the calendar at March 15th. There it is. Looks like Teasdale paid us in the form of a check. So for the check or reference number, I'm going to write that check number. It was $8,818. And if I now look at the receipt amount, it's showing as 0. But as soon as I check this box in this row with that invoice that we're collecting on, you can notice that the receipt amount populates with the correct amount, $151.45. So make sure yours says that as well. And that was found by taking the balance of the invoice and subtracting that discount. But remember that we did something special with that discount earlier because it was improperly calculated using the sales tax as part of the base as well. And we recalculated it using the pre-tax amount. The discount amount correctly is $7.50. And it's a good idea to look at the journal journal entry behind the scenes of this screen right now. So if I click on journal, I'll see that. Because we're in the receive money screen, we are going to be seeing an increase to either our checking account or maybe a payments to deposit account, depending on the workflow of the business. The textbook did not say that we should change this from the regular checking account, so we left it at that. If we did need to change this to say like a payments to deposit, a deposited funds account, right here where it says cash account, this is basically saying which asset accounts can be debited for this receipt of payment. And by default, it's just going to the regular checking account, so we didn't change that, but that's reflected in the journal. And then also we're collecting on an invoice, so we're going to have a decrease to our accounts receivable, so we see that credit there to decrease account receivable. And then we also see a decrease to our revenues through this contra revenue account called sales discounts. So that's debiting the sales discount, which increases the balance of sales discounts, but what sales discounts do is they reduce income, they reduce revenue. So that's doing that. So then I can close out of that journal entry, and then I want to post this transaction to the system. So I am going to click Save, which clears out the screen, and now I can close the window out. I want to go back. If I want to go back and look at that transaction again, if I click on Receive Money, now I can select View and Edit Money Received, and I should be able to find that transaction in this list. It was dated the 15th, so these are right now sorted by date order. I'm going to the 15th, and there it is right there, the one that we just recorded. If I double click on it, it pulls up that screen that we just saw. If I had to make any edits, I could, but I don't, so I'm going to close out of both of these windows. Another common step related to our customers and their transactions that involve them would be situations where maybe they returned goods back to us, or we gave them a credit for something that was maybe damaged or not to their liking. So we're not going to actually do that in chapter 3 per the book, but if I was to want to do that, I would click on this button and I could do a new credit memo. Otherwise, I can click on View and Edit Credit Memos, and I can look at ones that were already in the sample company here. It looks like there's a few of them, and if I wanted to look at any of them in particular, I could double click and sort of see what that screen looks like. So here it looks like we had some type of credit memo that was reducing the price that we were charging for some landscaping service. We don't have the detail of why this is happening, but we're giving them a break on that price. We're taking it off. We also noticed that on this example that I double clicked on, that this credit memo has not yet been applied. And basically what that means is that has not been matched against an outstanding invoice or refunded back to the customer yet. But once again, the text didn't ask us to do anything with these credit memos in this chapter, so I'm just going to close out of the window and this one as well. There are a variety of reports that we can run related to our customers and sales. We have several of the most common ones listed down below here. I'm going to take a look at the aging of accounts receivable report here. It's called Aged Receivables. Click on View. So this report is organized by default by customer, and it shows all the invoices as well as credit memos from each customer, and then it puts them in these columns based on the age of the transaction. So it's an aging report that's showing detail about the individual invoices from each customer. I'm going to close that one out. We can get to more of the reports if we click on the Reports and Forms drop-down menu, and then we can select Accounts Receivable to get to reports that relate to our customers and sales. And let's take a look here. Another common report that we'll be looking at fairly often will be our Customer Ledgers report. So I find that, and I'm going to double click on it to open it up. And I can see here that the default period of time that it's covering is in March. If I needed to change the time range, I can click on the Options button, and I've got choices here for the dates. But for right now, I'm going to leave that as is. So a customer ledger report is essentially an account receivable subsidiary ledger. It shows all the individual accounts receivable from all the different customers that we have. So if we look at this for maybe Archer here, we've got the balance of their account receivable at the beginning of March. Then we have some transactions that occurred during March. We've got little codes in here. So SJ stands for sales journal. So that gets used when we're making new sales to our customer. And then we also have CRJ, that stands for cash receipts journal. So that's an indication that we received money from that customer. So we see a sort of a running balance. So if we were to total these ending balances of all these individual customers' receivables, that would match up with the total balance of our accounts receivable at that same point in time. Each of these amounts in this report are interactive. So if I was to say double click on this transaction, actually I'm going to find the one that we recorded a moment ago. So we collected from Teasdale as well as we invoiced Teasdale. So we see those transactions down here. So if I double click on this $158.95, it'll pull up that original screen where we recorded that invoice, and now I can review the detail. I could potentially make edits. However, with a transaction that has a workflow that occurs after it, like a sales invoice afterward might have a cash receipt, you cannot change the sales invoice details once the cash receipt has already been recorded and posted. So if I needed to edit this sales invoice, I would actually have to go to these cash receipts and remove it first, and then go back into that sales invoice. Then I could make edits, save it, and then I'd need to re-record that cash receipt. So just a little heads up in case you do make some errors, that if a transaction in the workflow occurs after the point in time where the error was made, you may have to go back and remove the subsequent transaction to edit the prior transaction. So we've reached the end of chapter 3, and now it's time for you to do the exercises at the end of chapter 3. So if you continue to just work with Bellwether, you don't have to make your backup yet and restore it or anything like that. Just keep working. Just go on to exercise 3.1. You're going to be recording an invoice there to a customer. And then you're also in exercise 3.2 going to be receiving payment from that same customer for that same invoice. And when you do that receipt of payment, be careful. On page 128, it warns you that you're going to need to manually calculate the discount like we did earlier in this video, because the discount is being auto-calculated using the base, which includes the sales tax, and we wanted to use the pre-tax as the base for the discount calculation. When you've finished recording those 2 transactions described in the exercises, make sure to run the customer's ledgers report and create a PDF of it. I want just the PDF. The text says to create both an Excel version of it and a PDF, but the PDFs are what I want for grading. It's just easier for me to view quickly and give scores. And also on page 128, the text advises you to make a backup of your company at this point at the end of chapter 3. It says to use exercise 3-2 as the file name. I would suggest doing that just in case there are some issues down the road that we might encounter. But generally, once again, we don't necessarily need the backup files unless there's a catastrophic problem, but they're nice to have just in case there is that kind of problem. If you have any questions, let me know.